to my machine, but did you set it up to record on yours as well?
I did.
Okay, excellent. All right, so welcome everybody. Thank you for joining me for the first of my sessions at the conference today. I'm thrilled to be here. I do want to acknowledge from the start that the topics kind of got away from me as the department started issuing some guidance, and they just kind of got bigger and bigger and bigger. So I'm gonna focus on the basics here in this particular session, which would be a typical of what we might do in a more typical year. And then at 1:30 today in my professional judgment, income adjustment professional judgment session, I'm going to use a couple of the tax changes to kind of explain the income adjustment information that I'd want to talk about. And then in my session tomorrow at 10:30, excuse me, which is my open forum, I'm going to cover the $1 AGI issue, which is yet another new, not new, but another thing we're going to have to deal with this academic year. So if you're not able to attend all of the sessions that I'm doing, we are recording them. And I'd encourage you to take a look at some of the others, because some of the content that I wished I could have fit into this session is going to spill into those other sessions. And in addition, I'll cover a lot of this on November 8th when I do the non-conference first of two tax trainings for PASPA. So lots of opportunities to hear about this information. But let's jump in. Let me pick up my pointer. Here we go. All right, so just as a disclaimer, remember that we're, as financial aid officers, responsible for reviewing and not preparing tax returns. So I'm not going to talk at a lever that would allow you to take this information, use to prepare a tax return. So just remember that. And additionally, I've reviewed all of the Federal Department of Education's guidance through October 17th. So this recorded webinar, the live webinar you're looking at now, the handout are up to date as of October 17th. Though it is possible there'll be additional updates coming. I actually expect we're going to see more on a couple of the things. So if you're looking at this after October 17th, remember you are responsible for any changes that happened after we recorded this session. Let's start with a summary of the basic issues that we're facing in 22-23, looking at 2020 as our base year. And there are a number of changes to the tax forms. The numbers are going to be different. We're going to walk through the 1040 and schedules 1, 2, and 3 to look at where things fell. But there's a number of changes that aren't relevant to financial aid that you may see. One of which is that the virtual currency question that was on Schedule 1 in 2019 has moved to the 2020's Form 1040. I don't know why it says Schedule 2 here. It's on 2020's Form 1040. And that means it's no longer a factor in the did you file a Schedule 1 question, which we will look at today. If you remember back to last year, which is still an active year, 2021, 2022, someone can still answer, no, I didn't file a Schedule 1 if they checked yes or no to the did you have virtual currency in 2019. That's not a factor because it's not on Schedule 1 anymore. Other changes are that in 2020, for the first time, people can deduct up to $300 on their tax return of charitable contributions without having to itemize their deductions. That's on Form 1040. The recovery rebate credit is a new line on Form 1040. That is a reconciliation of people's stimulus payments that they may or may not have received in the actual calendar year 2020. There were 2 pandemic stimulus payments made available. One started in March, one started later in November. But IRS estimated the value of those payments to people based on 2019 income or 2018 income if there was a 2018 tax return on file, but not a 2019 tax return. These were income sensitive. So if the 2020 income was lower, people won't have gotten the full amount of their eligibility for their stimulus payments. So they get them when they file their 2020 tax return and they get a larger rebate or they owe less tax. And in addition, the 2019 or 2018 tax returns didn't show dependents that had been born in 2020 who would qualify for a supplement to the taxpayers' stimulus payment. So people would get the piece of the stimulus payment for their new family members by filing a 2020 tax return. There's no financial aid relevance to that. It's long after line 22, which is the last line on Form 1040 that we need to think about. But I do think it's a good thing for financial aid officers to be aware of, especially if you're working with students or their parents who were non-tax filers, who didn't file a tax return in 2020, 2019, or 2018, because they are eligible for a recovery rebate credit if they have Social Security numbers and their incomes are relatively modest, and they'd have to be relatively modest to be non-filers. So one thing you can put in the back of your head if you're interested in this is if you're working with a non-filer and they're struggling, they need additional resources, it can't hurt to ask them, did you get stimulus payments in 2020? And if they tell you no, and they have a Social Security number, then by filing the 2020 tax return, they may get a minimum about $2,400, maximum, depending on how many kids, could be much larger, but that money is still available to people who are non-filers who may not have gone through a process of asking the IRS for the money. They had to proactively go out and get it. And then finally, there on Schedule 3, Part 2, which we don't have to worry about, there are a bunch of pandemic-related payments and tax abatements that were added to the form. If you're an institution that adds back Schedule 3, Part 2 credits as untaxed income, you're going to see more of those there. But for FM purposes, these are just informational facts I'm sharing with you that aren't relevant. The two big changes to the tax form and then one to the tax code that we do need to worry about and we will be addressing are that there is no requirement to repay any excess advance premium tax credits in 2020. That's Schedule 2, Line 2. And the first $10,200 of unemployment compensation is tax exempt for any taxpayer who received it, whose adjusted gross income before adding in their unemployment compensation is less than $150,000. These are going to be the challenge of 2020 tax return review in 2022, 2023, because I was going to show you in a second, they were passed, enacted after 10 million people had filed their tax returns, and the IRS changed tax returns to make these adjustments. Let me table that for just a moment and just say the third of the big changes to the 2020 tax code is a new kind of emergency withdrawal from IRAs or pensions. This is called a COVID or a coronavirus-related distribution. I'm going to talk about this in my 1:30 session. This is going to create a lot of bases for appeals. And so if you have the opportunity to join me at 1:30, please do. If you don't, please review the recording, just so you understand what's going on when people say, I made a coronavirus-related withdrawal from my IRA or pension, and I hope you'll take that into account because it's showing up in my income, but it wasn't really income. The reason I say you should kind of learn about these is they're going to look a little bit different from your usual IRA or pension withdrawal. And so unless you kind of have a sense of what's going on, you may kind of be baffled by what you're seeing in the tax return. So let me come back to unemployment in Schedule 2, Line 2. On March 12th, 2021, the American Rescue Plan Act was enacted, and it retroactively made those first two changes that I mentioned. It retroactively made it no longer necessary to report a excess advance premium tax credit and pay it back on Schedule 2, Line 2. And it also implemented that unemployment compensation tax exemption for most people who would have received unemployment. And so the issue for us is if people filed their tax return before ARPA was passed, then they would have filed a tax return that didn't have these two changes on it. And what's going to happen is or what did happen is the IRS asked people, don't file a 1040X. We don't want to process it. We will make the change for you. So the IRS made changes to somewhere on the order of millions of tax returns that had unemployment or the excess advance premium or tax credit repayment, and just automatically refunded money that people may have paid or refunds that they didn't get without the person having to transact or trigger a 1040X. The problem for us is either that's going to generate a lot of IRS request flags of 07 because the IRS made an adjustment, and or, as we're going to see at the end of this session, the Department of Education has addressed the unemployment question and told us if we become aware that unemployment is included in the total income in the FAFSA income, then we have to remove it. So we might see a lot of 07 codes coming in for IRS from the IRS request flag. NASFA has posted that the department doesn't consider these changes an amended tax return, but I'm not sure how the IRS can distinguish between these changes it makes and other changes it makes in terms of producing that 07 code. So I'm not 100% sure that we will or won't see a lot of those 07 codes. So we may have to address them, so we should be aware of them. And then in addition, we are proactively told to address any unemployment compensation that's included in the income on the ISR. So we'll talk about that a little bit later. So let's get to the easy part of today's discussion. Let's look at forms 1040 and schedules 1, 2, and 3, and just find the FAFSA data on the 2020 versions of these forms. Ask ourselves, do we need schedules 1, 2, or 3 if we only get a 1040? And look at the did you file a schedule 1 question in 2020? Okay, so here is the income information from the first page of Form 1040. And the first verification item that we find is the adjusted gross income. It is now on line 11. Positionally, it's basically in the same place that it was last year, but the numbering has changed. There's actually, the IRS is kind of slowly moving back to the old 2017 tax 1040 that had all the information on it. They're pulling more and more information into the 1040 every year. And so the numbering is getting broader. But as I said, just gross income, the first of our verification data elements, is here on line 11. In this case, it's 60,550. Tax exempt interest income is up here on line 2A, just like it always was. Okay, great. Thank you for letting me know, Rachel. Carrie, if you're listening, I can't let people in from the waiting room, but there looks like there are people in the waiting room. See, do I have access?
Okay, we will take care of that. Joni,
Okay,
Joni, can you take care of that? Do you know?
Yeah, I mean, it could be that they're not going into a breakout room at this point, but the cat is out there in the breakout.
Okay.
Thank you. Okay, so the second verification item, as I said, is tax exempt interest income. And then the third is the IRA and pension distributions. And the answer to the IRA pension distributions is line 4A plus line 5A minus the sum of line 4B plus 5B, or I like to say 4A minus 4B plus 5A minus 5B. It works out to this, the math works out the same. And so in this case, it would be the untaxed portion of IRA and pension distributions would be $50,000. We don't see the word rollover here, so we don't have to exclude a rollover. Last year, it was 4A and 4C minus 4B and 4D, just been renumbered in 2020, but structurally they're the same. Now, in a later webinar that I'm going to do for PASFA today, I'm going to show you why this is a special kind of distribution. The indicator that it's a special kind of distribution is
we have 88 participants in this room.
Right. Yeah. Right. We sure have a lot in here. So,
Kat, did Joni tell you there's people that are waiting to get in? Robert said, I can't see anybody
Yeah, we
waiting
can't-
to get in.
There's no one waiting to get in. They're just hanging out here.
They're all stuck here.
Oh, okay, okay.
We're all,
Good
we
enough.
don't know how to get over there and we've tried a bunch of things.
So they're not
And
able to get into the room.
Okay, I'll go
and-
back.
Carrie, Carrie Wilson, you don't have the ability, I know you're moderating his session. You don't have the ability to admit anybody because that shouldn't be a thing.
Yeah, Kat can help you if you can get a message to her. Kat's
Right.
kind of directing people,
If we can hear who wants to get into a specific room, we can assign them.
trying to get
Oh,
into
there we
that.
go. Okay.
No, we can't. They're not able to go over there and be there.
They're not?
No, David and I are trying to figure out why they keep coming back.
Back here. Yeah, we
It's-
keep going back into this area.
It seems silly, but they do know you just click on the number and it says join. You know, the number of participants and then then join comes up. I mean, it took me a minute to figure that out, but. Okay, I'm leaving.
That the remember that the FAFSA instructions tell us Form 1040 line 22 minus Schedule 2 line 2. We're going to talk about Schedule 2 line 2 in a second, but this is the first half of that, 2749. Now here's Schedule 2 line 2, the excess advance premium tax credit repayment. You'll see that this is 0 on this. So the tax in this particular example would be 2749 minus Schedule 2 line 2. Now, I'm going to talk about this again in another webinar, but just so you know, as I said, one of the two things that the Congress did in the American Rescue Plan Act in March was retroactively eliminate the requirement to repay excess advance premium tax credit repayments, which means that anyone who filed their tax return after working, thank you, Carrie, anyone who filed a tax return after ARPA was passed should have a 0 here. And anyone who had an excess advance premium tax credit repayment before ARPA was passed would have had to put the number there, and the IRS would have sent them their number Schedule 2 line 2 value back. The good news about this change, should you get an 07 code from the IRS and learn that the reason is that the person paid an excess advance premium tax credit repayment that was refunded to them, is that the math works out either way. Whether you use the original tax return where there is an excess advance premium tax credit or the new one where there's a 0, the answer is the same. So with this one, there's no impact to the FAFSA that the department made the change. And if we just document that in a record, we should be fine going forward. And again, I'm going to talk about that in the 1:30 session again. Hopefully, you'll be able to join me there or view the recording. If we keep going, the rest of the verification data and the rest of the FAFSA data elements are pretty straightforward, just like they were last year. Schedule 1 at the bottom, we have the IRA deductions and payments. They are still on line 15 plus line 19. And education credits are still on Schedule 3 in line 3. So there's really basically moving from 2019 to 2020, we're just looking at renumbered data, and that quirk about Schedule 2 line 2, which will have no impact on us because that quirk, whether we're looking at an original tax return or one the IRS changed, will give us the same answer to the income tax for 2020. And it's just going to be a matter of documenting that the Schedule 2 line 2 change was the only change in the tax return. There's always the situation with conflicting information. Remember, if you're verifying off of a tax return or a tax return transcript, you are responsible for reviewing other FAFSA data elements that are listed in the FAFSA. And the big one that people often forget is that Form 1040 Schedule 1 line 12, the health savings account deduction, is cited as part of question 44H or 92H, which means that if you have a tax return, you do need to look at Schedule 1 line 12 to make sure that it is consistent with the information in the ISR. And there's really three things you need to do here. You have to check to see if those questions are greater than, less than, or zero. And so, for example, if you have, let's say it's the parent. So if you see in the ICER that the question 92H, the other untaxed income question here, is a positive number, and you don't have any information on the health savings account line, that's fine, because that could mean that the person had workers' compensation or some other kind of untaxed income. There's no conflict of having other kinds of untaxed income and no health savings account. So don't worry about that. On the other hand, if question 92H is 0 and you see a number here, that can't be right, because the number here should be included in question 92H. So I would just take whatever I see on line 12 here, put it in question 92H. There's no reason to assume that they had other kinds of untaxed income. We've just learned about a kind of untaxed income they didn't tell us about. I would go ahead and just overwrite the answer in the ICER with what I'm seeing on my verification document as evidence that this question was answered incorrectly. I think it's a little bit more complicated if question 92H is not 0, but also greater than what we're seeing here, because what that means is either they underreported this or they had another kind of income and didn't report this. So you have to ask yourself, is it possible that what they reported on the FAFSA was something other than the health savings account deduction, and they just forgot this one? And so in that case, you kind of have to go back and you have to ask, what did you put on as the answer to the other untaxed income? And then when you get that back, you either add the health savings account in or you reconcile it some other way. All right, so that's the tour of the tax return. Let me take a quick pause and ask if anyone has any questions about that segment before we jump forward. Please feel free to put them into the chat. Let me keep going then, in the interest of time. Remember, since 2018, the IRS has taken the 1040. That used to be one very long set of 60 questions, and they've carved it up into smaller pieces. And sometimes we'll get a 1040, but we won't have schedules 1, 2, and 3, which do have verification data on them. And we want to understand, do we have to go out and get schedules 1, 2, or 3, or can we conclude based on what we see on the 1040 that there's no verification issue with not getting them? And so if we go back to Form 1040, page 1, this is the same schedule we were looking at before. We see that Schedule 1 is listed twice here. So there's 2 lines we would want to check to ask ourselves, did the person file a Schedule 1 if we don't have one? But the interesting fact is the IRA deduction, which is on line 15 and line 19, would only impact line 10A. So the fact that this person filed a Schedule 1 to report other income doesn't change the fact that we know, because this 0 is here, that the IRA deduction must have been 0. So technically, I think we don't need to ask them to send the Schedule 1, because it's unambiguously clear that because Schedule 1, line 22 coming into Form 1040, line 10A is 0, because that's 0 and the IRA deduction would be in there, that means the IRA deduction must also be 0. Similarly, Schedule 2 is reported 2 times on the back of Form 1040, and Schedule 3 is reported 2 times on the back of the 1040. Here's the Schedule 2 indicators, but the Schedule 2 line 2, which is where that excess advance premium tax credit repayment is, would be here in line 17. We don't care about anything down here. So even if line 23 had a number on it and we knew they filed a Schedule 2, we would only need to get the Schedule 2 if there was a positive number on line 17. And similarly for Schedule 3, we see 2 instances of where Schedule 3 appears on the 1040, but because the education credits are on Schedule 3, line 3, they'd be included here on line 7. Here we have a value, which means we need to check Schedule 3, and if we don't have it, we need to get it, but we don't really care about anything way down here on line 31. The last line that matters for the verification is line 22 on the 1040. Anything down here is just gravy for the tax, for the IRS. We don't care about it. So my approach would be, if I look at Form 1040 line 10A, and I ask for Schedule 1 if I don't have it, if there's a positive number there. I then do the same thing for Schedule 2 on line 17 and Schedule 3 on line 20, and I don't go further back into the tax return. All right, so the did you file a Schedule 1 question is kind of the last piece we want to kind of check here. Now, this is what I call a discretionary correction. The Schedule 1 question allows people whose adjusted gross income is less than $50,000 to qualify for either the simplified formula or the auto zero variant. And what that means is, if I'm looking at a tax return and I see a did you file a Schedule 1 question and it has a yes or do not know, I'm not sure, which is the other alternative, but the AGI is less than $50,000, then I might want to check the Schedule 1 to see whether or not it was answered correctly, because if I can justify turning it into a no, I might be able to give someone access to the simplified formula if there's an asset contribution going into the EFC, or even better, the auto zero if their EFC is 27,000 or less. And they either answered, I don't know if I filed a Schedule 1, or a yes came in from the IRS data retrieval tool, or they answered yes because the question is incorrect. So the department has been very clear here. You are not required to review this question. The department sees it as not a way to give people lower expected family contributions, but to simplify the application for them so that they don't have to fill out the entire online application. If based on their AGI and another criteria, it's determined that they're eligible for the auto zero. Well, the AGI determines the eligibility for the auto zero. If someone were using the application online and the tool determined after they reported their AGI that they're not, they're going to be eligible for the auto zero, they're not going to ask the untaxed income questions, the exclusions, the earned income questions. They're just going to say auto zero, we've got what we need, and move forward. So again, the department says, we care about this as a FAFSA simplification tool. If someone finished the FAFSA and they were eligible for it, but didn't get it, they got through the FAFSA, they didn't need the simplification. But you can, if you discover that they should have been given the auto zero, the simplified formula, change the answer. So let's kind of look at what we're dealing with here. So here is the did you file a Schedule 1 question for 2020. And it says, did or will your parents, I chose the parent side, but there's an equivalent one for independent students. Did or will your parents file a Schedule 1 with their 2020 tax return? Answer no if they didn't file a tax return. If they didn't file a Schedule 1. That's pretty straightforward. But then they said, or only filed a Schedule 1 to report unemployment compensation, educator expenses, IRA deduction, student loan interest deduction, or Alaska Permanent Fund dividend. In other words, we have a situation where people answer, no, I didn't file a Schedule 1 if they didn't file a Schedule 1. And they answer no if they did file a Schedule 1, but only reported one or more of these 5 things on Schedule 1. And so they referred people to page 9. It just relists the things that people are supposed to answer no, even if they have them. But I do want to point out other untaxed income, other income to report in Alaska Permanent Fund here on line 8 may not be negative. And that's going to be a problem for us. And we're going to talk about that in a second. So now let's kind of find these 5 data elements and understand when someone should answer no, I didn't file a Schedule 1 on the ICER based on their 2020 tax return. So here's a fully completed Schedule 1. And the 5 items that can be on Schedule 1 that allow them to still answer no, I didn't file a Schedule 1 are unemployment compensation, the Alaska Permanent Fund, and only the Alaska Permanent Fund here on line 8. And here's a clue for you. In 2020, the Alaska Permanent Fund payment was $992. So if this number is any number other than 992 or 1984, which it would be on a joint tax return, there's other income on line 8 other than the Alaska Fund, and that creates a requirement to answer yes, because there's something else on there that is other than the Alaska Fund. Now, if those of you who are thinking ahead, know this is our problem, because this is where the unemployment compensation exclusion would be. And so anyone that has unemployment and compensation, whose income is less than $150,000 in 2020 is going to have a large negative number here. And that kind of makes this question on the did you file a Schedule 1 question kind of difficult. Because even though unemployment compensation is something that they're saying you can answer no if you have it, they also say line 8 can't be a negative number. And I'm going to address that in a second, but it's something, it's a big miss by the department that's going to cause a lot of students who use the data retrieval tool to lose out on the simplified application. But let's get back to the basics here. So unemployment compensation, you can answer no. Alaska Fund and only Alaska Fund, you can answer no. Educator expenses, you can answer no. IRA deduction, you can answer no. And student loan interest deduction, you can answer no. So this particular Schedule 1 has 5 inputs, 2 totals, and this person should still answer no, I didn't file a Schedule 1 if they fill out the application. Now, what about answering yes? Well, if we have some other income like jury duty sitting out here on line 8, that's not what was it? Let me just pop back here. That's not 992 or 1984. So this person has to answer yes. In addition, even though the health savings account deduction is listed in the FAFSA and the self-employed SEP simple and qualified plans deduction on line 15 is a verification item. These are business related or not exclusionary. And so people who have these 2 FAFSA data elements on their Form 1040 need to answer, on their Schedule 1, need to answer, yes, I filed a Schedule 1. And then finally, and again, this is another big miss by the department, but they just refuse to fix it. If someone takes the tuition and fees deduction, they're supposed to answer yes to the did you file a Schedule 1 question. So with these 3 examples, we also have business income here, which triggers a yes answer. This person should answer yes on the did you file a Schedule 1 question. Now, here's the problem that I was hinting at with tax exempt unemployment compensation. So for tax year 2020, the first $10,200 of unemployment compensation is tax exempt if the taxpayer's modified adjusted gross income is less than $150,000. Now, the way the IRS wants this reported is people report 100% of their unemployment compensation on Schedule 1, line 7, and then they report their unemployment compensation exclusion, UCE, as a negative number on Schedule 1, line 8. And this is a problem because even though unemployment compensation is supposed to allow a no answer to the did you file a Schedule 1, the fact that line 8 may not be a negative value forces a yes answer to -1. So if this were the only information on someone's Form 1040, unemployment compensation, the Alaska Fund, and an unemployment compensation exclusion, this is a negative number. Almost anyone who has unemployment compensation is going to have a negative number on line 8. Certainly anyone whose adjusted gross income is low enough to qualify for the simplified formula or the auto zero, where the Schedule 1 question matters, is going to have a big negative number on line 8, unless they have a lot of other income coming in on line 8, and that's not very typical. And so everybody is going to look at this question and say, I guess I should answer yes, because line 8 is negative. And in fact, I have confirmed with the department that if this were the only information on a person's tax return, on a person's Schedule 1, the IRS data retrieval tool will return a yes answer to the did you file a Schedule 1 question. And I have asked the department more than once whether if you find out that the reason they answered yes is due to the unemployment compensation exclusion, whether you can change it to no, and I don't have an answer back from them yet. So I'm going to go out on a limb, and I'm going to say, in the event that, okay, in the event that you determine that the reason the yes answer is sitting out there in the did you file a Schedule 1 question is due to unemployment compensation and this large negative number on line 8, I'm going to go out on a limb and say, given a choice between giving someone who's got unemployment compensation and got a tax break for it, the simplified formula or the auto zero or not, I'm going to say, since everything on that line 8 is either Alaska Permanent Fund or related to unemployment compensation, which is an allowable income to have based on the Schedule 1 question and getting the auto zero, the simplified formula, I'm going to say that if I were an 8 officer, I would change the did you file a Schedule 1 question from yes to no in this circumstance. And why would I do that? Because if we don't do that, then no one who had unemployment compensation in 2020 is going to be eligible for the auto zero or the simplified formula. And that cannot be the intention of this question. And since we know that the department didn't do many modifications of the FAFSA from 2019 to 2020, and they certainly weren't interested in starting investigating that after March, that I'm guessing we're going to get some guidance at some point in the future that allows us to do that. But in the absence of guidance, I'm going to do the logical thing in my head, which is to say it can't be the intention of this question to eliminate eligibility for the auto zero and simplified formula for people who took a tax break for unemployment compensation. It can't be. And therefore, I would fix this, as I said, even though there's a large negative number here, because the only income listed on line 8 is Alaska Fund and the unemployment compensation exclusion. I'm going to treat this as a no, I didn't file a Schedule 1 appropriate answer in the ISER. Now let's kind of look at the electronic announcement that covers parts of this question about unemployment compensation. The department issued 2 electronic announcements, one on September 30th, and then they did a revised version of it on 10/15. And in this electronic announcement, we got a couple of pieces of information. The first of them is they clarified that we remove unemployment benefits from the applicants or parents or spouses AGI or untaxed income on the FAFSA. And so on October 15th, the department put its foot down, made a decision and said, the secretary is waiving the requirement to report those untaxed unemployment benefits as untaxed income using his authorization under the HEROES Act. So were you looking at a tax return in 2020, and if you saw the unemployment compensation exclusion here on line 8, you do not add it back as untaxed income. The October 15th electronic announcement made it very, very clear that we don't do that. If you see it in question 44H or 92H, then you would remove it because the secretary says using his authority under the HEROES Act to say, do not include unemployment compensation as untaxed income. And so that's pretty clear now. NASFA had put out a Ask Regs where they said they had gotten information from the department that this was to be treated as untaxed income, but then they pulled it and the department issued this statement. So it is unequivocally clear that for the purposes of the federal methodology in 2020, we ignored the unemployment compensation that's tax exempt. The other thing we need to do, though, is if we get a tax return and it shows us that the unemployment compensation exclusion was not taken, if we got a tax return, for example, that had $29,792 of unemployment compensation, but we didn't have the UCE here, we have to act. We are told to remove untaxed unemployment benefits from the applicants or parents' AGI, which would be the case if we didn't see it removed on line 8 here, or if it's reported as untaxed income. And I'm going to cover that in my 1:30 session. So again, if you can join me at 1:30, we're going to walk through the process of removing untaxed unemployment compensation from the AGI. If it's reported in an AGI in the ISER, that would be people who filed their tax return earlier than the ARPA passed. And if you can't join me at 1:30, we will be recording it and you'll be able to see it there. One other thing I want to call out here is also in the 10:15 announcement, and I want to show you that if you do download the PDF version of this, scroll up into the chat where we posted the link where you can get it. You can download this electronic announcement. It says, when a financial aid officer becomes aware that an applicant's FAFSA ISER includes untaxed unemployment benefits, either in the applicant's or parents or spouse's AGI or in untaxed income, those benefits should be removed. When the financial aid administrator becomes aware, what this means is if you only have information coming in through the IRS data retrieval tool, you have no way of knowing whether or not the person had unemployment compensation or not. And therefore, you don't have to take action. You don't have to kind of bring new information onto your campus if someone doesn't provide you with a statement that that allows you to know they had unemployment compensation. On the other hand, if you verify with a tax return or you get the tax return or the tax return transcript, even with an IRS DRT, and you see on that form that they had unemployment compensation but didn't take the UCE, then you should remove them. So this is a situation where you have to check to see, is there a reason on your campus to believe that they may have had untaxed unemployment compensation that remains in their adjusted gross income. I would suggest that if someone uses the IRS data retrieval tool and they have a very low income and that brings in a yes answer to the did you file a Schedule 1 question, that might be a good test. You might want to reach out to them and ask them about their unemployment compensation, because we know that UCE is going to create that yes. That might be a good indicator that they had untaxed unemployment compensation. Oh, I'm saying this backwards. Let me step back for a second. Let's imagine that you have an IRS data retrieval tool data set and someone brings in their data, brought in their data, and they had a relatively low AGI, and the did you file a Schedule 1 question was no. Now, we don't know in that case whether or not they have unemployment compensation or not. But even if they had it and they filed their tax return before March 12th, that no is going to be there. So you have to ask yourself, did we do an unemployment related professional judgment in 2021, 2022, or 2020, 21, so that we know they have unemployment, and yet we have this IRS data retrieval tool data set that came in with a no answer to the did you file a Schedule 1. Those two things are incorrect. And so that might be the kind of thing you want to test to see whether or not you need to get information from the taxpayer that allows you to remove the untaxed unemployment benefits that are stuck inside an AGI. And again, I'm going to cover this in more detail at 1:30. So key takeaways from the electronic announcements on this. Unemployment compensation should not be reported as untaxed income. You should remove it if you see it reported as untaxed income, and you should remove the untaxed portion of unemployment compensation from the AGI if the taxpayer didn't claim the AGI and you have a tax return that shows they had unemployment but didn't claim the unemployment compensation exclusion, didn't claim the UCE, you are required to take it out and recalculate the tax. And the third piece from the electronic announcement is, even though in 9:30 they were talking about professional judgment, in the 10:15 announcement they made it clear these are corrections, not professional judgment. You would use professional judgment if you were going to remove the rest of the unemployment compensation, but if you're only adjusting it to correct for untaxed income that was reported in the ISER, you were correcting, not using professional judgment. So that's what I'd wanted to talk to you about. I do apologize. The 2020's tax returns and the ARPA changes to the tax code are going to complicate our lives a little bit, but please don't take it out on me. I'm just trying to help you figure out how you're going to address it. In the few minutes we have left, we've got about 5 minutes left. If anybody has any questions, please type them into the message box. And again, I'm going to talk about the unemployment compensation and Schedule 2, Line 2 again in more detail in my 1:30 session. And then tomorrow at 10:30 in my open forum, I'm going to talk about the other 9:30 electronic announcement, which had to do with the $1 AGI question. What do you do if you see a $1 AGI coming in through the IRS data retrieval tool? So thank you. We can pause a couple of moments for questions, but I'm going to pass it back to Carrie as we wait.
Okay, thank you so much, Robert, for all the great information. As he said, we do have a few minutes left. If anyone has any questions, you can put them in the chat. I did want to remind everyone to fill out a session survey each time you attend a session at the conference. And you can find those surveys within each agenda item on the Whova app. As we mentioned a couple times, we're recording all of the sessions, and there also is a link in the chat to the presentations, which you can download. Any
Carrie?
last questions? I don't think we have any last questions.
If a student or parent answers,
Oh,
I
we do.
don't know to the Schedule 1 question, does that hurt them?
Okay.
Yes, the answer is it hurts them because a do not know is treated as a yes. So if if they're using the IRS data retrieval tool, they wouldn't have been presented with the question if their AGI was so high that it wouldn't matter. So if they answer don't know, then they may be missing out on the auto zero or the simplified formula, and so it can hurt them. So that would be a situation where if there were, income was be lower than 50,000 and above 27,000, and there was an asset contribution, you could kind of try to get what the answer was to see if you can eliminate the assets from the formula. And if they had a non-zero EFC and their AGI was less than 27,000 or 27,000 or less, you could get that question and you might be able to get them a zero EFC. So a don't know is a harmful answer for anyone who might have been eligible for these two topics. Carrie, I was going to say, if someone listens to the recording where we lost that break and lets me know, I can kind of try to record that piece again so we can fix the video. So just let whoever knows know that I'd be happy to kind of fill in the gap.
Okay, I will let them know. Thank you very much for offering to do that. And thank you once again. I think we're on to the next, I think we're on a break now, and then another session begins, I believe, at noon. Okay.
Thanks, everybody.
Thanks
See you
again,
soon.
Robert.
Bye.